Sometimes the most telling signs aren't shouted from the rooftops. They sort of whisper in the background, almost unnoticed.
Hmm.
And right now, there's this fascinating undercurrent in the financial world, um, a kind of silent alarm, maybe,
Hmm.
related to gold.
Hmm.
And it's not really dominating the mainstream news or, central bank statements.
Yeah, and what's really interesting, I think, is how gold's traditional role seems to be, well, evolving. Historically, as our source material from ITM Trading points out, we've seen gold act as that classic safe haven,
Right.
something investors flock to after a crisis has already hit the headlines. But the current data, it suggests something different might be happening now.
Exactly. Our source really highlights this significant trend.
Hmm.
Central banks aren't just, like, dabbling. They're actively and substantially increasing their gold reserves. Big time.
And then there's Basel III.
Right. And those international banking regulations under Basel III now classify physical gold as a top-tier asset,
Yeah.
right up there alongside cash and government bonds.
Plus, the demand for physical gold, actually getting your hands on the metal, is remarkably high globally.
So the core questions we want to get into in this deep dive are, why is gold behaving like this leading indicator, maybe signaling something before a widely acknowledged crisis?
Yeah, what do the central banks, the big players, understand about the system that maybe hasn't fully filtered down to the public yet?
And probably most importantly for you listening, how might understanding this information be relevant to your own financial strategy, your own planning?
So to really get to the heart of these questions, we're going to be focusing on the arguments presented in a YouTube video transcript. It's from ITM Trading, titled "Gold is the Plan. Central Banks Know It. Basel III Confirms It."
Okay.
Our goal here is really to dissect the key points they raise, to understand this potential shift in gold's role within the whole global financial system, and consider what the implications might be for you.
Okay, let's unpack this then. The video transcript starts by looking back. The historical relationship between gold and fiat currencies,
Mm.
specifically the U.S. dollar,
Mhm.
goes back about 50 years, right, to Nixon ending the dollar's direct link to gold.
Mm-hmm.
So what were the key patterns they identified in that history?
Well, the pattern highlighted in the source is pretty distinct. If you look at the gold price in US dollars since the early 70s, you see these significant jumps upwards.
Okay.
And they tend to line up with periods where the fiat system, especially the dollar, faced, considerable pressure.
Like the 70s inflation.
Exactly.
Yeah.
The rapid inflation of the 70s and early 80s is a prime example. Gold saw a huge price increase then. And similarly, the 2008 financial crisis.
Oh, yeah. Bank bailouts, subprime mortgages, debt exploding.
Right. All that triggered another significant rise in gold prices, and we saw it again more recently during the 2020 pandemic crisis. Lots of money printing, liquidity injections.
Okay. So in all those cases, the gold price really took off after the crisis was all over the news, right? After the panic had set in. It was that classic flight to safety during the storm.
Precisely. Gold's price surge was the reaction to a clearly visible problem. But what the source material really emphasizes is the current situation.
Where the price is rising before the headlines.
Kind of, yeah. Gold's price has been steadily appreciating over the past few years, even without what many would call a universally acknowledged full-blown crisis hitting the front pages. So this suggests, well, maybe a break from that historical pattern.
And this is where it gets really interesting. The transcript suggests that the actual structure, the underlying financial system itself, might be changing.
Mm-hmm.
And this time, gold isn't just reacting, it's maybe being built into the foundations.
Yeah.
So who are the main players driving this potential shift, according to the source?
The source material points very strongly towards central banks. They're seen as the key drivers.
Okay.
It highlights the, frankly, unprecedented levels of gold buying by central banks over the last 3 years or so.
Unprecedented how? Can you give some context?
Yeah, so they mentioned that back in 2008, central bank net buying was around 300 tons. Then in 2009, as the financial crisis was really unfolding, that number jumped to about 800 tons.
Okay, so that '09 jump sounds like a direct response. Crisis hits, buy gold.
Exactly. That looks like a reaction to the crisis environment. But the current buying spree, it seems different. It's happening without that same immediate crisis narrative dominating everything.
So it's more like preparation.
That's the argument presented, yes.
Yeah.
That this current accumulation is more like strategic preparation, getting ready for a potential future system, a proactive move, not just a knee-jerk reaction. And the source also raises a really relevant point about underreporting.
You mean they might be buying even more than we know?
Potentially, yeah. It references those long-standing suspicions about certain major players like China, maybe not fully disclosing their gold buying back in 2009 or 2015.
Hmm.
So it could mean the actual scale of central bank gold accumulation is even bigger than the official numbers suggest.
The transcript also brought up this idea of gold being called home
Yeah.
and high demand for physical delivery. What's the significance of that?
Well, that speaks to a really fundamental shift, I think, in how gold is being viewed and handled. The high demand for the physical metal, not just paper claims, suggests that key players, central banks, big institutions are prioritizing the tangible asset.
They want the actual bars in their vaults.
Exactly. Gold being called home implies they prefer the real thing over paper representations. It suggests they want direct control, maybe seeking security in what they see as an uncertain or changing financial world.
And this connects directly to the Basel III regulations you mentioned earlier, right? Can you explain a bit more about Basel III and why its view of gold matters here?
Sure. So Basel III, it's basically a set of international rules for banks. Comes from the Bank for International Settlements, the BIS.
Okay.
And what's crucial for this discussion is how it classifies physical gold. It's now officially a Tier 1 asset.
Tier 1, that's the top category, right?
Yeah.
Like cash.
Exactly. Tier 1 assets are considered the highest quality, most liquid assets a bank can hold, equivalent to cash and government bonds. But the source makes an interesting point here.
Such as?
Physical gold carries no counterparty risk.
Meaning there's no risk the other side of the deal will default, unlike a bond.
Precisely. So arguably, it's a more fundamentally sound store of value than debt-based assets like bonds. By calling gold Tier 1, Basel III essentially gives it this big stamp of approval within the global banking system. It recognizes it as core, safe, liquid. It means banks can hold more gold relative to their other assets.
Okay, so Basel III gives gold this regulatory thumbs up as a core financial asset. Now let's look at how central banks are actually managing their reserves. The transcript mentioned gold holdings as a percentage of their total foreign reserves. What are the trends there?
Yeah, the source indicated that the global average for central bank gold holdings as a percentage of total foreign reserves was around 20%. That was based on data ending in 2022.
Okay, 20%.
And given the recent huge surge in central bank buying we just talked about, it's pretty likely that percentage has actually gone up since then.
And historically, what about the other 80%? What's that mostly been?
Historically, yeah, that other 80% has largely been held in U.S. treasuries, U.S. government bonds. They've always been seen as, super safe, super liquid, the go-to reserve asset.
But the transcript raises a flag here, right? A potential concern about treasuries still being the dominant holding.
It does. The source points to a couple of main factors causing some nervousness, let's say.
Okay, what are they?
First, the sheer size of the U.S. national debt. It keeps growing. And that raises questions for some holders about the long-term stability and, the perceived safety of holding massive amounts of U.S. government debt.
Makes sense. And the second factor?
The second is this concept of the weaponization of the dollar.
Ah, okay. Using the dollar's power for political ends.
Exactly. Using the dollar's central role in global finance as a tool of foreign policy. Things like freezing or even seizing a country's assets if they're held in dollars.
Right. So if you're another country's central bank
Yeah.
and you see that happen,
It makes you think twice, doesn't it? If your reserves can just be unilaterally frozen or seized because of geopolitics, it kind of undermines the whole idea of a neutral, safe reserve asset. Makes U.S. treasuries look potentially less attractive or at least riskier for some.
okay, I see the connection clearly now. So central banks are buying record amounts of gold.
Mm-hmm.
And at the same time, they might be getting a bit less comfortable holding huge piles of U.S. treasuries because of debt levels and this weaponization risk.
That's the picture the source paints.
So what potential shift does the source suggest this could lead to?
Well, the source floats this idea of a potential flip-flop.
A flip-flop.
As central banks keep adding more gold to their reserves, the proportion held in U.S. treasuries could naturally decrease. It doesn't necessarily mean, a sudden or total abandonment of the dollar overnight.
More like a gradual rebalancing?
Exactly. A strategic diversification, a repositioning of their assets. The underlying idea presented is that maybe gold, not just the U.S. dollar, could become the central anchor, or a central anchor, in whatever the next phase of the global monetary system looks like.
Wow, that's a profound shift to even consider. And the transcript finishes by suggesting this isn't exactly front-page news because, well, if everyone understood it.
Right. The idea is that a widespread understanding could reveal potential vulnerabilities in dollar-based savings and investments.
Which might lead people to look for alternatives. like gold.
Potentially, yes.
Yeah.
If individuals widely grasped that the core institutions, the central banks, were actively preparing for a potential move away from a purely dollar-centric world, it could prompt a big reassessment of traditional investment strategies.
And maybe a move toward assets like gold. It's almost like talking about it could speed it up.
That's the perspective offered in the source. That shift in public sentiment and investment flows could itself put more pressure on the current dollar-based system.
Okay, so let's try to summarize this deep dive. Based on that ITM trading transcript, the core takeaway seems to be this. Gold looks like it's signaling a pretty significant evolution in the global money game.
Hmm.
It's being driven by record central bank buying. It's supported by regulations like Basel's the Third, and it seems to be potentially shifting from just being a reactive safe haven.
To becoming a more proactive, maybe even central piece of the global financial structure.
Right. And this suggests a potential slow move away from a system totally dominated by the U.S. dollar, fueled by those worries about U.S. debt and how the dollar gets used geopolitically.
Precisely. And understanding these shifts, even while they're happening relatively quietly, is pretty crucial for you, the listener. It gives you valuable context for, navigating the financial world right now and maybe thinking about your own financial well-being.
So here's a final thought for you to chew on. If the conventional wisdom about what makes a safe reserve asset, especially the long-held status of U.S. Treasuries, is being subtly challenged by the actions of the very institutions holding the most reserves, well, what implications might that have for your own approach to preserving wealth and finding financial security in the years ahead? Definitely something worth pondering as this quiet but potentially major shift in gold's role continues.